On behalf of Motilal Oswal Securities, I would like to welcome you all to 1Q FY19 post-results conference call of Ashok Leyland. Ashok Leyland is represented by Mr. Gopal Mahadevan, President and Chief Financial Officer, and Mr. K.M. Balaji, Vice President, Corporate Finance. I would like to thank the management for taking time out for the call. We'll start the session with the opening comments by Mr. Gopal. I would now hand over the call to Mr. Mahadevan.
Yeah, good morning, everyone. Thank you very much for being on this call, and thank you very much for the interest in Ashok Leyland. I'll quickly summarize the financial performance, hand it over, because I'm sure there's a lot of questions on the new axle norms, and I would want to have that discussion and answers to whatever questions that you have. So overall, the industry has grown very smartly at about 84% to 89,027 units. Of course, this has been on the low base of last year. But even having said that, even with that low base, I think the industry growth that has happened has been very, very satisfying. Ashok Leyland has also grown tad lower than the industry, but has grown judiciously, if I may use that term, because we were very clear that we would not want to get into unprofitable deals. It is not that we don't want to grow. Let me assure you that the medium-term strategy of the company is and the goal is to grow at the same rate, if not faster than the market. But you are going to see quarters where sometimes if we don't participate in the market because of heavy discounting, it's because we also want to ensure that we maintain cash flows and profitability. So we have also shown a pretty healthy growth of 60% over the same quarter last year. Our revenues have grown at 47% to 6,250 crores, and our PAT has grown at 233% to 370 crores, and our EBITDA has been 10.4%. Just wanted to share with you that this is the 13th quarter out of the 14 sequential quarters where we have had double-digit EBITDA. The cash in the balance sheet, net cash, is 1,165 crores, so we continue to be cash positive, as we move. Other than that, I think we raised prices in 1st of April, possibly the only player to do that because raw material prices are increasing. We have also tried to astutely change the mix of the vehicles to ensure that, our profitability is maintained. And our overheads cost continue to be in control, which is something that we have been doing continuously. Invariably everybody has the question as to how much more can you squeeze out of this? Well, the thing is that things can only get better, so we have to be good at this. And we are getting better and better at this, and we need to do that. So I'm going to leave with this brief introduction, and of course we have had this new axle norm being announced by the government a couple of days ago. So I'm going to there are, I think, positives, negatives, and neutral aspects also to this norms, which we can discuss about in the call going forward. So it's back to you, Dinesh.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashwini Kumar from Reliance Mutual Fund. Please go ahead.
Yeah, Gopal, good morning. See, I had two questions, basically. One, is there a new truck required for this, which will conform to these new conditions of load conditions, axle load conditions? That's one. Second, you have, let's say, in terms of your end usage is, let's say, nearly 200 types of end customers use trucks, let's say, ranging from oil tankers to cement players, coal players, water transportation companies, and many other end users. Some of these are volume-led kind of thing in tractor trailers. For example, the trailers, the steel companies use it, and also the car companies, or, for example, the two-wheeler companies. So there is one issue of dimension, and second issue is of load. So one is the physical volume, where even if there is a 20% load there, unless and until you really modify the vehicle you can't load extra because it is a volume constraint thing. So what part of the industry actually gets, what proportion of the total population or out of these 200 types, how many of them actually get impacted by this regulation? That's one. And what is this concept of new truck which is required for this specific thing? These are the two questions which I have.
Thank you, Ashwini. I think it's a very, very good question, and gives me an opportunity to clarify. I'm going to go a little broad-based and also clarify so that the same questions don't come up again. Wonderful question from your side. You see, I'm going to just step back and tell you that yes, this new norms axle norms have come in, and it would have been better if the government had actually consulted the industry for the launch date of these norms, because then we would have had a glide path and a plan to kind of comply with these norms. By the way, these norms are one of the highest in the world, if not the highest, and we are even higher than the US as far as the axle weights are concerned now, which is, the GVWs are concerned now. Why the government has chosen to do this level of weights is not clear, because the road conditions, while they're getting better, are not as good as what they are in the West. My answer is going to be slightly longer, because I thought this is not just a question that I want to answer for Mr. Ashwini Kumar, but for the larger set of investors who are also there on the call. So this is one part. The second part is, so there are three aspects to this whole thing that I want to touch upon. One is applicability, the second one is impact, the third one is readiness. As far as applicability is concerned, whether it's going to be prospective or retrospective. If it is prospective, things are better for the industry as well as in terms of the country also, because we can get the vehicles ready. Of course, we have not much time because they are already applicable, but these have to be approved and then the vehicles will get rolled out. If it is retrospective, frankly, if somebody has bought somebody has bought a vehicle from me just about 2 days ago, we can't say that, no, excuse me, now you got a 20-tonner, now you can actually go and load 24 tons. It's not as simple as that, because while there is overloading, which is happening, India is predominantly still an overload market. While market, everybody talks about rated load, it is not happening everywhere. Yeah. So this has to be done very judiciously. But if it is done retrospectively, one of the most important things that we have to be very careful about is the impact it will have on safety. Because suddenly you're opening the gate valves and people will start, doing overloads where it is not applicable, where it is not safe. There is volume, there is weight, there is impact, there is center of gravity, there's a whole bunch of stuff that is there in a vehicle that we have to look at before you start overloading. So the vehicles have to be engineered according to the spec. Now, hopefully, these are not going to be applicable retrospectively, but we'll have to wait and watch. Now, the second one is impact. You had rightfully said, Mr. Ashwini Kumar, is that the impact, if you were to look at it, and if I were to cut this industry very broadly, there is tippers, then there is ICV, then you have got bulkers, cement bulkers, oil tankers, scooter carriers, car carriers, and a lot of other applications which are volume-based. Merely tippers and ICV segment alone will account for roughly about 45% of the total, nearly 45% of the total industry volume for the first quarter itself. And if you were to add the scooter car carriers and bulkers, etc., I think another 10% will go. So you have a situation where 50 to maybe 60% of the volume will not get impacted because of the new regulation. And secondly, in tippers, which is almost heavily overloaded, if the government is going to say that, no, I'm going to increase the axle load norms, but what I'm GVW norms, but I'm also going to ensure that I monitor it very strictly, then actually we can see the possibility of tipper demand actually going up. Yeah. Because if they're going to be extremely strict, then the tipper guys would have to buy more tippers. Right? So, that's why I said this. Not of all of this is absolutely grey, and there's a lot of panic. I don't think there is any necessity for panic. I will also come to the panic piece of it, not because I'm in the truck industry, but because we have seen the commercial vehicle industry over the last few years and how things have panned out. The last aspect of it is readiness, which you asked. Yes, is this a new truck? It's not a new truck. But is it the same truck as an old truck? It's not so. For example, predominant part of the industry actually works on a tire which is called as 10R20. That's not going to work under the new norms. So we have to have higher tires, maybe what is called as 11R20. There is tires which are called as 295 sizes. They may be tubeless if you have to go for heavier weight applications. The tire industry also has to be ready. right? So I actually see multiple tires being, various types of tires being fitted on the same vehicle to have various GVWs. Secondly, there are things that we may have to change depending on, again, in this 1 hour call, I can't give a breakdown, but, we have also kind of reviewed. There will be impact on steering. There will be impact on transmission. There could be impact on chassis. So we may have to put additional flitches, for instance. So the vehicle will be different. Is it totally different? It's not totally different. But modifications will take time. It is not only for us, it is for everybody else. And then after that, we have to get the CMVR approvals. That will take about 3 to 4 weeks. So the government, while it has announced it immediately, is surprising because there is a process that has to be followed if you want to deliver vehicles which are going to be compliant with the new GVW norms and which are going to be safe. Now, coming to the panic bit of it. The panic bit of it, I am saying that, we had the same kind of panic, and I appreciate the concern that investors and analysts are, showing, because obviously they would like to know what, to bring a certain amount of certainty to something that has, kind of shaken the pot over the last couple of days. So, but if you look at the BS3 to BS4, when it happened in exactly 48 to 72 hours. Well, there was a short-term impact, but things stabilized immediately. Similarly, when GST happened, people were very concerned that, this is going to increase productivity by 15%, so that the truck demand will come down by 15% because of GST demand. At that point in time, I remember sharing my views, and I was right, not out of pure wisdom, but logic more than anything else, was because I said that if there's anything that's going to be more productive, we actually would see more investment coming in, and that's what happened. And the industry, which was a negative in September last year, grew to a 14% positive for the full year. Now here, of course, this year we started with a huge 84% positive. But yes, is this something that could have been done better? Certainly. It could have been done more consultatively. It could have been more planned. The impact could have been looked at. And then sectors could have been addressed. But, well, it has happened. So at the moment, all I would say is that the reaction that we are having from various constituents is possibly a little too more worried than we should be worried about. At the same time, I'm not saying things are all hunky-dory, but I think there are both positives and negatives that will come out of it, provided the government is going to enforce the norms pretty clearly. This is a long-winding answer, but I thought I'll give a larger answer for Ashwini's question.
Thank you for this. Thank you for this.
Thank you. The next question is on the line of Hitesh Goyal from Kotak Securities. Please go ahead.
Thank you. Thank you for taking my question. So, Gopal, basically just touching on this point again. First, what I wanted to understand is that what is the actual, in your view, do you have any data or sense on what is the actual overloading happening across India? And if you can break down across South, North and West, what is the kind of overloading you see anecdotally, I guess, because you don't have any data. That is first. And secondly, also, will the government also, come up with a regulation on scrappage? Because, after this regulation, like you said, many old trucks may not be able to comply with the latest regulations. So will it also lead to a, situation where they come with a scrappage policy in next few months or in, next 6 months?
I don't know. I think the scrappage policy, take the easy one, is supposed to happen in 2021. That's what the government had announced. They would want to do it along with the introduction of BS6 norms. And that would actually help the industry because, immediately after the BS6 pre-buy that happens for BS4 when the norms are coming in, that year possibly the introduction of scrappage will possibly see 200 to 300,000 vehicles coming into the demand market, which will help the industry. As far as the overloading norms in the country are concerned, it's very, very difficult to estimate because, there are sectors, subsectors, and there is no official data available. But our guesstimate is, the overloading starts anywhere between 22 to 40%, yeah. So these norms are, they are kind of formalizing arrangements which are already there. So I don't think that there is going to be a severe depletion because it's not like, we are all a strict rated load country and everything is going as per rated load and suddenly the load is getting increased. Everybody is reacting like that. It is not so.
And would it be fair to say that overloading is more prevalent in North and West than in South? Is there regional disparities also in overloading?
Yeah, I would believe so. That is what, the industry pundits keep saying, that in South, the loads are more rated than towards overload, maybe 60-40 ratio of rated. whereas in the north it is more towards the same ratios, more towards overload. So, of course, there was a lot of, there was again a lot of worry when UP and Rajasthan, the overload, the rated load norms were loosened a little bit. Again, at that point in time, not to sound defensive, you folks know it. If there's something that is needs to be shared, we'll share. But at the same time, when we look at it, UP and Rajasthan volume and the impact of the rated load removal was not very significant on the overall volume of the country for total industry volume as well as for Ashok Leyland. Here, the norms, I would say, is that are only going to, if what we hear and what the analysis that we have, and believe me, I've failed to mention the most important thing, this rated load, the revised GVW norms are based on a study of, that's what the government says, of 10,000 vehicles. And they have found that overload is predominantly there, and that is how they have increased the norms by about 20%.
Okay.
And so, you are going to formalize a relationship which existed now, if that is the case. So that's why I'm again saying, if the government, and this government is known for strict implementation also, if there is strict implementation of the overloads, I think net, it will be favorable for the industry.
Okay. Just a final question on this point. I just want to understand, there's an investor concern also on the, say basically like Marutis and HULs, they have a specific requirement of trucks, right, in which they want freight operators to carry load. Does that change with this regulation, or they, they're predefined, specifications on the trucks that they can carry? So I would believe they would be working at, yeah.
Marutis, Hero Hondas, and other, that's what I mentioned. The car carriers, truck carriers, cement bulkers, oil tankers are all based on volume. So you can't have over-dimensional, you can't have a truck and say, I'll have over-dimensional cargo. In fact, the government had come heavily on over-dimensional cargo, and that is how the truck carriers and fleet, the truck and, some motorcycle carriers and car carriers had to reduce the volume of the entire cargo and reduce the number of vehicles that they can carry. So in our estimate at the moment, this is not going to impact that. That's why I said, if you look at tipper, if you look at ICV, if you look at volume-based segments like bulkers, cement bulkers, or oil tankers, or truck and, two-wheeler and car carriers, I don't think that will form about 50 to 60% of the total industry volume. I don't think that the revised GVW norms are going to impact them at all.
Okay, great. Thank you, Gopal.
Thank you. Thank you.
Thank you. The next question from the line of Ruchit Mehta from SBI Mutual Fund. Please go ahead.
Yeah, hi. Just extending this subject, would you need to also upgrade some of the engine capacities, particularly the higher end or wherever the maximum delta in load weight has happened?
I don't believe so. See, we may have to, we may have to make some adjustments to torque, etc., if it goes really top of tops. But I think the predominant ranges, what our guys, when we had a discussion, was that the more than the engines, it is going to be the tires and the drivetrain and the chassis that will be changed, but not, and the brakes also.
Okay. Fair.
Not the engine purely.
Okay. So, from today onwards, right, logically any buyer of a truck wouldn't want to buy any truck because effectively in a few weeks or a few months' time, he would get a truck with maybe 5-10% extra cost, but 25% or higher payload. So, do you see now a phase where you need to really sort of crank out all the products as fast as possible with the new norms? And how fast can we get the entire fleet re-homologated to the new standards?
Well, I expect the following. I think short term, in a month or two, I don't know whether it's a month or two, because we have to get clarity on the norms. The government is still not clear whether it's retrospective or prospective, and exactly how the certification process is going to happen. You would see a sudden stop. If I were an average fleet operator, I'll say, no, let me just hold on and not buy the truck now.
Okay.
So you are going to see it. But whether that will happen whether it is going to happen across, I have my doubts. So you actually, what we'll see actually happening is that the tippers may continue to grow.
Okay.
The tipper demand may not go because it's an overload segment anyway. But, there are certain sectors like 37-18 where things can slow down a bit before they get picked up again. So net to answer your question very simply, I would see some downside in the demand for the next 30 to 45 days.
Okay.
Once the CMVR approvals come and everything start moving, then after that it becomes easier, yeah.
Okay. But what is the timeline for re-homologation? I mean, for you internally to get the product ready and then to give it to ARAI to re-homologate, from scratch, what is the timeline? What are we looking at?
That's what I said. It will take about 3 to 4 weeks.
3 to 4 weeks. Okay.
Which is standard ARAI timing approvals.
Okay. And just one clarification, you mentioned a couple of times that you're not sure whether this is applicable retrospective or not, but there is sufficient social media posts, including from Gadkari himself, talking about that, we can't monitor this on the existing fleet, and why not let them also allow to have it the higher loading. So, is that sufficient enough?
Can you repeat your question, please? I'm sorry, I missed it.
I'm saying a couple of times you've mentioned on this call that you need clarity on whether these new norms are applicable retrospectively or not.
Yeah.
But since yesterday evening, there has been quite a few sort of posts on online or on the newspapers, etc., where Gadkari has talked about that, why not allow the existing fleet operators to also benefit from this. Is that sufficient enough clarity for you, or you still need an official sort of notification on this matter?
You see, there are two people who have to get clarity on the subject. Two sets of people. One is the existing fleet owners, and second one is the truck manufacturers.
Okay.
It is more important for the existing fleet operators because based on this, if they start doing overloading, and if there are either physical damages to the vehicle or there are safety issues, or if the authorities catch, then they have a challenge.
Okay.
Right. The second one is, so we can't go by newspaper press reports. So we will have to wait for a certain, we need to have a clarity on this, because if the existing fleet operators are going to be allowed to do it, existing trucks can be allowed to get into the revised axle norms, we really need to understand, how are they going to get certified? Or are they not going to get certified? If they are not getting certified, why should new vehicles be certified? Then you don't require certified at all. It defeats the purpose of a certification, right?
Fair.
So I really don't know. See, that's why I said there are certain aspects of it where we are really not clear. How is this going to happen? Because it's the government which is the best judge. That's why I said if it had been consultative and if we had a glide path to it, we could have had clarity on this implementation. Right? Otherwise, it is still possible that somebody will buy an old truck and then say that, no, I will load the 25% on it.
Okay.
That's also possible. So, hopefully the government, we are just hoping, because initially what the government said is, it is only prospective. Right now, there has been newspaper reports, but I would prudently wait for a circular from the government instead of relying on newspaper reports, because they are not formal systems of communication.
Okay. Fair. All right. Thanks.
Thank you.
Thank you. The next question is from the line of Anupam Tiwari from the Axis Mutual Fund. Please go ahead.
Sir, thanks for the opportunity and good morning. Just wanted to ask, if you read the notification, it says very clearly that it is prospective, so there should not be any confusion on it, because the GVW has to be lowest of notified by the government or as declared by the manufacturer, right? Or
yeah.
But it is certified. So from that perspective, it's legally very clear that it is only prospective. Now, my question is that if you have to now start getting into new regime of new models with higher GVW, and you said that 3 to 4 weeks is required for designing the product.
Not designing, for approving the product.
Okay. How much time it will take for you to design the product and doing whatever minor verification which you do?
It depends on, that's what, it's a very difficult process. Maybe it may take 2 weeks, it may take even 3-4 weeks, because it really depends on what is the impact that we are having on the tonnage in each of these axles. So the very large vehicles will take a little more time, whereas the smaller vehicles, with the MDVs will possibly be done faster. So I think we should expect that anywhere between 4 to 8 weeks is what will take for us to sort out. We have to, of course, see, that's what I'm saying. I have to look at tire vendors. They should be ready with the tires. So they are not, they are saying that they don't have the tires. Because there's no point in putting the existing tires and also then changing the spec. Maybe the government may allow it. So we are still talking about an uncertain animal. There's no doubt about that.
No, let's forget government or any other aspect. If as a manufacturer, now you want to say that, okay, we were selling a 16-tonner or 37-tonner. Now, let's say, for example, 16-tonner now becomes a 19-tonner.
Yeah.
And you need to design an officially, which can be certified with your standards as a 19-tonner vehicle. With everything being done, what would be the timeline? When would you be ready for production, commercial production?
That's why I said 4 to 8 weeks.
4 to 8 weeks. So it's fairly short time. It's not a very long time to take, And how now in this situation you will do demand?
No, that's what I'm saying. You are trying to bring in absolute certainty to an uncertain process, because if they say no, that the existing tire sizes will be allowed for the higher thing, because ultimately we have to get the approval, no, my dear friend. So we will know only when we test the waters. So suppose then it is not happening, then it is not 4 to 8 weeks. I have to go back to the tire manufacturer. They should have the molds for it. They should have the capacity for it. It's not an Ashok Leyland problem. It is an industry problem. Then maybe it may take 3 months also for a particular type. I don't know. So that is what I'm saying. See, it is just 48 hours since the notification has come. So in 48 hours, I can't really say that, no, in 4 weeks I'll get it or in 8 weeks I'll get it. It's an assumption at the moment that between 4 to 8 weeks we can close the matter for predominant part of the vehicles.
Okay. Now, second question is, maybe it's slightly weird and kind of not very sure how to answer it, but now in this new environment, how you will do demand forecasting? Because the inventory management will become, let's say there are minor changes in the kind of vehicle that you want to produce. So which one to produce, 16-tonner, 19-tonner, which model to produce? Would it be too difficult? Your inventory level will go up, or?
See, I'll tell you, it's not a weird question. It's a most practical and insightful question. I'm sharing with you. So we are actually producing certain types of vehicles. We are not producing certain type of vehicles now, and we have to ensure that we are able to. What should we say? Ensure that inventory pileup does not happen because certain vehicles don't get picked up. So we have to look at multiple options when you're doing it, and demand forecasting will happen only from the ground. Like it happens, so our guys will have to be staying closer to our dealers and with our fleet operators. As we speak, we are getting in touch with larger fleet operators, getting their insights into this, what they feel about it, because they may have a completely different view on this entire notification, right?
Correct.
So I think a lot more clarity will come a week from now.
And last thing from my side, is there an upgrade possible for, let's say, with minor changes from an existing 16-tonner to a 19-tonner?
Can you repeat your question, please?
Is there any upgrade possible at factory level from, let's say, an existing model, which let's say a 16-tonner, which moves to 18-tonner or 19-tonner?
Yeah, the upgrade will happen. It's not that we're going to produce a new vehicle.
No, I'm saying an existing.
See, we'll have to look at wheelbase. We'll have to look at the tire size. We'll have to look at the steering. We'll have to look at the chassis. If there is a flitch required, then there's something called as a flitch that maybe have to be put on the chassis.
Okay. Thank you, sir. Thanks a lot and all the best.
Thank you. The next question is from the line of Prateek Podar from ICICI Prudential. Please go ahead.
Sir, just stepping away from the axle load questions, 2 questions. One is, could you just talk a bit about the competitive intensity? And when I look numbers, I'm not sure, but there's some loss of market share for Ashok Leyland. So where is it where you draw the boundary line and you say, because others can be irrational, where is it where you draw the boundary line and say, what, now market share is more important to me than profitability? Is that something in your mind as of now? Could you just talk a bit about that? Thanks.
Yeah, you are absolutely correct. We have to draw we have to draw between cash flow, profitability and market share. So we have lost market share for 4.5% in the current quarter. Our market share for truck and bus put together is about 30.2. But, what has happened is we have gained in bus market share. We have gained by 4.3%. So our market share in trucks is 40.7. and our market share in truck was 28.8. We are 5.6% lower than same quarter last year. But that reason was because, the mix, the weight of truck is heavier on the overall mix. Having said that, you see, the basic point comes like this. We will not do a deal where, there is market share, there is revenues, there is profitability, and then there is ROC and there is cash flows. What we will not do very clearly is we will not do a deal where I do negative margin. First, I'm not going to sell anything below variable cost. It doesn't make sense, right? So that is something that we will not do. Between gross margin, that is on variable cost, to a standard level of gross margin, we take decisions based on the criticality of the customer and the volume. So I'm not going to chase the ones and twos with very, very low pricing. Doesn't make sense at all. You will only discount your way and you will set a new lower hurdle rate for yourself as we move forward. So here you have to, and then the third thing is we don't do credit push. We have not pushed a stock into the channel. We possibly will not do it, because if we had pushed it, I could have gained some market share by selling more and not bothered about the retails. We have a close eye on the retails also. See, that has helped us in times of difficulty also. If we look at it, the whole BS3 to BS4, we got off with negligible impact because we had not pushed inventory into the channel. Now, so if you ask me, are we not focused on market share? Of course we are focused on market share. Otherwise, how do you think as a company we would have moved from 24 to 34% market share over the last 6 to 7 months? We have been investing in network. We have been growing the network disruptively. We are, adding layers and layers on it, purchasing low-cost layers into the network. So we will continue to do that. There are multiple ways to skin this cat. So we have to ensure that the market share bit is not just on discounting, but also on other total cost of ownership. So we are working on that. Yes. If it goes below a certain point, we may say, okay, let us readjust our gross margin levels and look at gaining some share. So, we are having those discussions now. But at that point in time, well, our profitability can be sacrificed. It's possible. So then we have to look at how to augment the EBITDA margin for that quarter or for that particular period by the cutting cost also, which we are doing. So there is no secret sauce to this saying, if I do this, I will get this. So it's a confluence of factors. So, and typically the other challenge we have, this industry operates on the month end. There is frenetic activity. So we take some dynamic decisions at the end of the month. But we were not, while we noted that we have lost about 4.5%, we believe that we should be able to gain it as we move forward.
Understood. So by the year end, can we, or your intention would be to gain back some of this? As in, say, this quarter, whatever market share you are at, that would be the lowest. Is that what you're
Let's hope so. I don't give out outlook, but let's hope so. Yeah. Let me put it this way. Our interest is not, we don't have discussion saying, okay, just look at profits, guys. Don't worry about market share. No. We say our market share is dipped. So how do we get this back? Oh, is this what we have to do? Can we do this? Can we do this? Can we do this? Okay, we won't do this. And how do we gain the market share back? So hopefully you will see that our market share in the subsequent 8 to 9 months will actually move northwards.
Great, sir. Thank you so much and all the best.
Thank you.
Yep.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant only. The next question is from the line of Shyam Sundar from Sundaram Mutual Fund. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Sir, in the LCV segment, more in the 6 to 7.5 ton segment, will the revised norms be applicable? Of course, this is a very small segment in the overall.
I don't believe so. We are waiting for clarity on that. I don't believe so.
Okay, sir. Sir, and in this quarter, are the LCV subsidiaries fully consolidated in the results? How is the EBITDA margin performance in the LCV business currently, sir?
Can you just repeat your question?
So the LCV businesses, the Nissan joint ventures, erstwhile Nissan joint ventures, are they fully consolidated in this quarter?
No, we don't publish consolidated results. The results are standalone.
Okay, so how is the margin performance in the LCV business now, sir?
I think the LCV business has been doing very well. If you look at last year, the full year PAT, we had actually become PAT positive in the LCV business, doing very, very well. The gross margins are even better than the MHCV business. I think this is a business which seems very, very positive for us, doing a great, this is the smartest turnaround that we have seen. Both, I would say LCV and HFL, which the markets were worried about, are doing exceptionally well. HFL for the last quarter actually did a 5% EBITDA. I mean, last year did a 5% EBITDA, far cry from the negative EBITDA that it was posting. So, LCV business also has become completely profitable at PAT level, not just EBITDA.
Okay, okay. Sir, in terms of, we are seeing a very sharp increase in commodity prices, but if you see the gross margin performance has been very strong this quarter. So is there an element of mix in terms of maybe defense and spares this quarter, if you can throw some light on that, sir?
I think our aftermarket and, our aftermarket has been growing at nearly 28%, which is very good. I think last year, full year was about 30%, but we have actually seen the aftermarket in the current quarter actually growing at about, I think about 28% or so. So it's been a good growth. Our exports are forming roughly about 9% of our revenues. That has posted again, I think, about nearly 24% growth in our revenues. And LCV, of course, has gained market share. It has moved from 15 to 16%, posted a 34% growth. What else did you ask for? So I think most of the business is doing reasonably well.
Yeah, yes, sir. So, sir, what would be the mix of defense this quarter, sir, as a percentage of revenues?
Defense today, I mean, this quarter was not very high. It was hardly about 3 to 4%. Yeah, typically it's about 6 to 7%.
Okay. Sir, one last question, if I may. Sir, assuming the norms
are... Sorry to interrupt, Mr. Sundar. Sir, may we request that you return to the question queue?
Okay, no problem. Thanks. I'll come back.
Thank you. The next question is on the line of Sonal Gupta from UBS Securities. Please go ahead.
Yeah, hi. Good morning, sir. Thanks for taking my question. Just continuing with the same, I mean, what was the share of domestic trucks and buses in revenue, if you could give that for the quarter?
Domestic truck, see, we don't actually completely give a complete breakdown of thing, but let me give this. Our truck revenues were roughly about 62% of our revenues.
Okay.
Bus was at 8 to, about 9 to 10%.
Okay, that's... And so just in terms of what is the Capex that we expect for this year and next year, I mean, given...
Well, we'll at the moment, we'll take it year by year, but I think this year we possibly will go to a max of about 1,000 crores, predominantly into LCV business, which I talked about earlier in the previous quarter also. Then the second we have is in electric vehicles. The third one is what we have, we continue to invest in the modular vehicle program, which is very important. And then you have residuary Capex also. I think our, manufacturing will require a lot of debottlenecking, and so we are, we are doing on that residuary Capex also. So overall, I think it will be about 1,000 crores.
Okay, sir. Great. Thank you so much.
Thank you.
Thank you. The next question is from the line of Dharmender Singh from Axis Mutual Fund. Please go ahead.
Hello, sir.
Hi.
Yeah, sir, I have a question on your BS6, which you have done recently tied with Hino.
Yeah.
And you have a successful on BS4 with your EGR technology.
Yeah.
So going forward, will you change the technology to SCR or will you remain on EGR and you work on it? And because of this, what do you see a pre-buying and where you see the scrappage will come, the sale will come through because of scrappage?
Okay, you actually asked two questions. One is about BS6 strategy. Second one is on scrappage.
Yeah.
So let me add to this. BS6, ultimately the level of NOx and emissions that we need to have for BS6 will require SCR technology. We can't do it with EGR alone.
Okay.
At Euro up to BS4, we can do that. But at BS6 level, you would require selective catalytic reduction, because what you require is, after the engine manifest, you would require diesel oxidation catalyst. Then we have the other EATS boxes, as you call, exhaust after treatment systems. And then you have the selective catalytic reduction urea dosing that's required to ensure that the NOx emissions are significantly reduced. So we have our company called Albanair, from which we can source the urea dosing systems. And then we have tie-ups with other companies for the EATS, the exhaust after treatment systems. So we are very much on track on our Euro 6.
So on the scrappage, sir?
Scrappage, I think, is expected on 2020-21. That's what the government is saying, and that means a good timing, because what happens is immediately after 1920, you're going to hopefully see a lot of pre-buy for Euro 6. So, so when that pre-buy happens, Euro, then 2020-21 will see a little bit of a reduction in demand, because there will be a, exhaustion after the pre-buy. At that point in time, if the scrappage policy is come in, that should introduce about 200 to 300,000 units into the market, because the scrappage policy, which is made attractive, will induce demand from the market.
So because of this BS6, do you see a heavy pre-buying, or it will be a standard one, which happened in BS4?
I don't know, but I expect the pre-buy to be quite heavy, yeah.
Okay.
Because the vehicles will become costlier.
Correct, yep. Thank you, sir.
Thank you.
Yep.
Thank you. The next question is from the line of Ashish Nigam from Axis Capital. Please go ahead.
Yeah, just a clarification, Gopal. This 1,000 crore Capex is only Capex, or is Capex plus investments?
I think it should be able to fit into investments also. We'll have to see whether we'll have to put some residuary investment in Optare, because Optare, if you notice, the chairman's statement is very important and is on the verge of a turnaround. See, I think just wanted to take this. We've turned around a lot of businesses, so that's important. I mean, even as we grow market share over the last 4 years, 5 years, if you look at it, our market share has grown nearly about 10% over the last six years or so. Our network has grown from nearly, 300 points of presence to nearly about 3,000 to 3,200 points of presence. We have launched a state-of-the-art product, and we have also kind of, impaired a lot of investments, walked out of certain things, acquired the LCV JV from Nissan, closed down the John Deere JV, impaired Optare, but we are fixing Optare. We have merged HFL, and which is now successfully turned around. So we are doing the same thing with Optare. So Optare may require some funding. We are not too clear how much at the moment, but is it going to be huge money? I don't think so. Maybe about 6, 7, 8 million pounds. We expect that the 1,000 crores will take care of that also. Other than that, we are not seeing any major fund infusion actually happening in the subsidiaries at all. In fact, we are also eagerly waiting for, of course, we'll have to wait for the timing of the HFL IPO. There's a price discovery, because you do know that all investors know that the HFL shares are, valued in the balance sheet at a significantly lower amount. HLFL, sorry, not HFL, HLFL, my apologies. Ashok Leyland Finance.
And this 200 to 300,000 trucks which come up, in the scrappage, you're talking about 20-year-old trucks, or is it 15-year-old trucks? How are you all seeing that?
I'll tell you, to be candid, beyond 15 years, there's not much of data. Even between 10 and 15, it's not. So whether it is 15 or so, I think that these numbers will stick.
Okay.
See, because I'll tell you, that's why I said, if it is just scrappage, that won't help. The government has said, it will help, but what we will see actually is there is an incentive for scrappage, with the government saying that they will give a rebate on GST. They are also going to look at 100 or 150,000 rupees. At that point in time, somebody will say, let me now dunk this old truck and get a new one, because it makes financial advantage for me.
Got it. Okay.
The simple way to tackle all this, I just put myself into somebody's position and say, what would I do if I were to do that? I would say, I would sell my truck, because I'm getting financial advantage out of this.
Yeah. Great. Thanks so much.
Thank you.
Thank you. The next question is on the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Yeah, thanks for taking my question. So, a few things. One, in this quarter's numbers, if I see almost 928 crore of inventory reversal in the line item, can you explain that, sir?
928 crores of?
Inventory reduction.
In this quarter?
Yeah.
Oh, there's no, I don't know. Well, where is that?
In the expenses line item, the changes in inventory.
Oh, you're talking about in material cost?
Yes, sir.
No, that is part of the material consumption, because what it happens is you have the raw material purchased and the net changes in WIP and FG.
Mm-hmm.
So that has come as part of the, 1 second, I'll just take that.
We'll have to look at it in total, where is the result? Yeah. Total, all the 3 line items we'll have to look at it.
I'm actually not clear about what you're meaning by inventory reduction. Let me
so basically the quantum was...
yeah, yes, please.
Basically the quantum looks slightly on the higher side, and if one, including that, the raw mat total quantum looks on the lower side, as somebody also asked. So anything special like consumption of old lower cost raw mat inventory on the higher side this quarter?
No, there are no. That will come as a charge. Mm-hmm. So it is a normal consumption that has happened here. There's nothing major on that.
So taking forward that gross margin, like in this quarter where raw mat expense for the overall industry moved up, discounting wise also more or less static for the industry, mix wise also nothing much of a change. So any specific reason why the gross margin shot up so much significantly? And
no, the gross margins have been changed because of the mix that has happened. You see, from last year onwards, what has happened is, especially in the second half, the tipper volumes have started to go up, right? The higher tonnage vehicles have started to go up.
Sir, if I look at sequentially, sir, because the whole higher tonnage product mix increase already was there for the second half of the year.
Yeah.
So on a sequential basis, it has moved up significantly.
No, the other thing has been there are 2 other reasons. One is also we have taken price revisions, right? So the impact of price revision start coming in. Like, for example, when I do a price revision in the month of January or, later part of it, the impact of the full price revision start coming in the month of April, May, June. And similarly, we had another additional price revision happening in the month of April, 1st of April.
But your blended ASP on a sequential basis, in fact, is slightly lower. And mix is
no, you can never do that. That's what I'm saying. See, the
LCV mix model. Yeah.
Because what happens is, you see, there has also been a higher profitability on the LCV side. The LCV profitability has improved significantly.
Sure. So, like, now your LCV scale is almost, 4,000 per month. At what level one can expect that your LCV margin will be better than your rest of MHCV portfolio margin? Because it's also a function of operating leverage.
Can you just repeat your question again? Sorry, there was a line cut.
Sir, at present levels of scale of LCV at 4,000 per month, at what level of that run rate one can expect that the operating leverage will be good enough to make the LCV margin at par with the rest of portfolio or even better than that?
LCV margin is actually as good as the current portfolio margin. We have already accretive to the overall business.
At EBITDA level, it's at par margin with the rest of portfolio?
At EBITDA margin, we are almost close to that. At 4,500 levels will be, even better than this. Because the truck size is small, the investments are also small. The investment that we've done in the LCV business is quite depreciated now, right?
Yeah.
And the gross margins are actually, the gross margins over variable are better than the heavy commercial vehicle.
Sure.
Yeah, that's why I said it's a very smart turnaround that has happened. And the cost itself has been, smaller operations, slightly smaller set of people. So while the revenues are, 2,000 to 2,500 crores per annum, still the margins are getting now better.
Sure, sir. And last question, sir, like after Pantnagar addition, there hasn't been any major capacity addition. So where we'll be reaching almost to full utilization in the MHCV for 1,80,000 volume in next 2 years' time. So when do we see the next greenfield MHCV capacity addition? When can the Capex start?
I don't think we will have any large. I don't think we will have any large greenfield additions. I think
because sir, if as you saying the scrappage policy, 2 lakh plus demand coming up from FY21, then you might run short of capacity by then, sir.
No, but not in all segments. You see, for example, in my chassis capacity, I don't see that's why I said this is a little more complex. Your question is interesting, but we are also looking at modular vehicle program where we are going to bring in commonality of parts. Mm-hmm. Okay, the second thing is we may require, like for example, there was a paint capacity that we needed to increase, which we have done. right? And similarly, we may require something in rough machining which may be added. So we are continuously on debottlenecking. Plus, we require facilities in cab facility and bus body building, which we have done. Now, for example, the Andhra facility, we are putting up a bus body building there. Bus assembly, not bus body building alone, bus assembly facility there. So we will continue to debottleneck, but you are not going to see some single shot 3,000 crores of capex anywhere.
So theoretically, sir, like 180 MHCV capacity, at best on a debottleneck basis, how much one can assume that can move up potentially because of all these activities which we are taking?
I think we can go to about another 10 to 20% more, excluding LCV.
That is 220 without much of capex.
Yeah.
That's great, sir. Okay, thanks.
I'm saying without much significant chunky capex, like 2,000
Sure.
3,000.
Yeah, around 400-500 crores.
For a company of this size, I'm telling you, which is including new initiatives like LCV, because we are now going to refurb it. The Dost is quite 7 years old. And then if you look at electric vehicle and all that, this size of capex is very, very normal, very tight.
Surely, sir, the kind of working capital reduction and annual free cash flow generation, the 1,000 crore of capex per annum won't be that much impactful. That's great, sir. Thanks.
Thank you. The next question is on the line of Achala Kanatkar from Birla Mutual Fund. Please go ahead.
Good morning, sir.
Morning.
My question was with respect to the product mix, as you mentioned earlier.
Can you be a little louder?
Hello, can you hear me now, sir?
Yes.
My question was more with respect to the product mix. If you see in last one and a half year, we have seen the tonnage moving up, which is where we have seen average realizations going up. With these new norms coming up, especially with the overloading, do you think the demand would probably shift to the, lower tonnage vehicles?
The shift will be, I'm sorry, miss, but I'm not able to hear what you're saying. The shift will be to lower tonnage vehicles?
Yes, because now their loading, their carrying capacity has gone up by 20-25%. So rather than buying a 37-tonner, I would probably buy a 31-tonner. Do you see that kind of a shift in demand happening? So
no, I don't think so.
Growth may not get impacted, but on a tonnage-wise, it can, come off.
I don't think so, because you see, what is going to happen is what shall we say? India is an overloading country only at the moment. So what the government is saying is, after examining 10,000 trucks, what is happening is that they find that there is an overloading norm which has to be regularized, which is what they have done. So a guy who has been transporting with an overload will actually, a guy who has, what shall we say, who has been transporting on overloading norms will only want to buy a truck which is going to transport that size of vehicles. He's not going to, that size of goods. He's not going to come down and say, no, let me buy a lower tonnage truck.
Okay.
You understand? If somebody was carrying 100 and he was actually doing 120, now what the norms are going to do is they are going to regularize 120. Right? So he is not going to say, no, let me go and buy 100 because the new norm is 120. That is why I'm saying, see, the impact of this is seen very, very, it's being looked at as there's a big hit. I don't think so.
Okay.
It's like, it's like formalizing an informal arrangement which is already there.
Okay. Fine. I just had this one question. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Kapil Singh from Nomura Securities. Please go ahead.
Yeah, hi, sir. I just wanted to know, has there been any discussion with the manufacturers that their trucks are capable of carrying 20-25% higher loads because the interview from the minister seemed to mention that?
No, I'm sorry. Can you repeat your question again?
Has there been any discussion between the government and the manufacturers that the existing trucks are capable of carrying 20-25% higher?
No, there has been no discussion. This is the news that has come up only yesterday. We'll have to see with the formal announcement. In fact, this entire rollout, that's why I mentioned at the beginning, if this rollout had been was consultatively done in with the industry, we could have had a glide path to it and ensured a smooth transition, which unfortunately did not happen.
Okay. But ultimately, this is going to depend on implementation, because how practically anybody is going to, even if it is prospective, how practically anybody can identify that this is a truck manufactured after 16th of July or before that.
I agree with you.
Okay. Thanks. Thank you, sir.
Thank you.
Thank you. We'll take the next question from the line of Aditya Aluwalia from Invesco Hong Kong. Please go ahead.
Hi, thanks. Just regarding the price hikes relating to commodity costs, are we through with those, or do we still need to take some more hikes to pass on the commodity cost increases?
See, if the commodity prices increase, then I think we will have to take hikes because there is no other choice. We'll have to look at how steel prices, predominantly the steel prices, so steel prices we'll have to see how it goes up or how it moves. See, there are some indications that we are getting from experts in the market that steel prices will come off a bit in the second half of the year. That's good news for the current industry.
Right. So whatever has happened has already been passed on?
Yeah, predominantly.
Right. If you see some bit of...
See, I want to share that. Yeah, go ahead. Okay, go ahead, please. Sorry, go ahead.
No, sorry. I have a please continue on.
No, what I'm saying is these are not actually, straight equations where you say that my commodity is increased, so I'll pass on X percent. What we try to do is actually see whether my net price realizations are improving month on month. And then I see what is my net cost impact per truck and see how the margins are getting impacted. The moment the margins are getting impacted, we start to raise prices.
Sounds good.
Yeah.
So, on that, if you see some slackening of demand in that people start waiting because of this regulation or for whatever reason, do you see competitive intensity going up further, or do you see pressure on margins because of the excess inventory or for any reason like that?
Okay, I think competitive strategy will continue to be competitive strategy irrespective of what they are. If they believe, if somebody believes in pushing stock into the system or heavy discounting, I think they will continue to do that. If somebody believes that they have to give network and, engage with the customer better and grow profitably, they will continue to do that. I don't think the new axle norms will do that. In fact, the other theory that's going around, there are so many people now guessing, is if suppose the new norms are also applicable to old vehicles, then we are not even going to see a reduction in demand. The vehicles will be bought even today. If there is clarity and if it is said no, it is for existing vehicles also, then existing vehicles will be sold as such. See, there are so many theories, but I'm just saying that, we have to really wait and watch on the clarity, because one thing that I'm very sure about is that the fear that all of us seem to be having about this is possibly not to the scale that it needs to be.
Sure, I understand.
That's my guess at the moment.
Right. You mentioned that if the implementation of the overloading is more stringent, then things will probably be even better for the industry than they are right now. What do you think was stopping the implementation as of now? If it was lack of infrastructure, I think that will still continue to remain. If certain roads did not have these automatic weighing systems, that still continues. Yeah.
I frankly do not know. I can make guesses, but I wouldn't want to make a guess. But I think the government has chosen that this is the most opportune moment to announce, and they have announced it.
No, my point is that overloading beyond the point, the implementation of stricter enforcement, is not as easy as what people are making it sound to be, that, we will increase it and now there will be stricter enforcement. How easy is the stricter enforcement is the question.
It is not difficult either. You see, if there are weigh bridges and stuff like that among which the entire industry is participating, and that's how the industry is not participating, the entire industry is going through. If instructions are given that they have to be implemented, they will be implemented. But it's about how intense the implementation needs to be. It's not about how impractical it is. If they need to implement it and they say that they're going to fine heavily, then people will follow.
Right, I understand. And just one little thing, the LCV subsidiaries which were not a part of the standalone will become a part of the standalone from the next quarter onwards, right?
LCV, family?
LCV subsidiaries, ALVL and some subsidiaries which were not a part of...
There's the three subsidiaries LCV companies, yes, please.
They will become from next quarter onwards?
No, the merger has to go through a process. We'll complete it possibly by the third or fourth quarter.
Oh, okay. Okay, so this year the impact won't be visible.
No, this year the merger would have, we hopefully will, with the new statutory approvals, we'll have the merged accounts.
Okay. Okay. Thank you. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Pramod Amte from CGS-CIMB. Please go ahead.
Hi, Gopal.
Hi, Pramod.
Coming back to the axle load situation.
Sorry to interrupt, Mr. Amte. Can you speak a bit louder? We're not able to hear you.
Sure. If assuming that this axle load is for new vehicles, do you think the winning strategy is how fast you introduce to maximize this axle load policy, or you feel it's a one more variant available to the transporter to play around with?
No, it's not one more, because if they have defined the axle loads, then all the vehicles that we produce in the next few months will all have to subscribe to the new axle load requirements, no? It can't be that they can buy vehicles which are non-conformant and we'll also have vehicles which are conformant.
No, I mean to say your existing models will continue to have those, as you were saying, with some of the models where the entire loading is not fully exploited.
No, it is not that way. You see, that's why I said all of these vehicles will have to now get the ARA approval.
Right, provided you want to go to the fullest extent of the load.
Yeah, so we have to. It is not about we going. We have to. If somebody is buying a 20-tonner, for example, or a 27-tonner, and then they say that 27-tonner can now go for, say 10% more, which means it will come to 30-tonner, the existing vehicle will have an ARA approval for only 27 tons. Okay. So that has to be approved for 30 tons. Otherwise, you can't carry 30 tons.
So the winning strategy has to be that how fast you come out with those new models and...
Yeah, absolutely. So we will do it as efficiently as anybody else.
Okay. And second, if the norms apply for the entire fleet on the road, do you think any of your warranty provisions which you build in can drastically change?
It will. So then we will have to look at it that the warranty will be applicable only for the old norms. If we have given warranty as per standard load, I can't give warranty for higher load also, no? It may be legal now, but the vehicle is not used only for a particular application.
So you have to review those?
No, but we will continue with our existing norms.
Okay. Thanks. Thanks and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Yeah, so I think I would only add one thing. I think we've seen the performance of the company, and I think we have done better than what the circumstances required, and been very happy with the performance of the company. The second thing is with respect to, I think, the axle load, where seems to be a lot of concern. I don't think the concerns are at the moment required to be at or at least the concern seems to be quite significant without us understanding the impact of this. And as I see it, to conclude, I think the impact on nearly 50 to 60% of the existing volume of the industry will be very, very minimal. Like what I mentioned, the tippers or the ICVs or, the bulkers. On the rest of it, we'll have to figure out how the government is going to look at it, and even if we have to, increase the load, I don't think that this is going to make a major dent into the overall volumes of the industry. In fact, at the moment, I would say that while it's very, very difficult to forecast, if the government, if the GDP were to grow and the government were to continue making investments into infrastructure, I think the industry will grow at about 8 to 10%. Most importantly, what we must remember, which I think people are possibly need to be convinced about, is that the market is already an overload market. So what we are doing is only formalizing something which is there. And I am not stating it. This is what the government has stated, that they have looked at about 10,000 trucks and looked at the overloading pattern and decided that this is how it has to be formalized. So I don't see a demand for trucks coming off. So I just wanted to share this, leave these perspectives with you. And I'm now handing it over back to Jinesh.
Hello, Jitesh. Would you like to add any closing comments?
I'd like to thank the management for taking time out, and thanks all the participants for attending this call. Thank you.
Thank you very much.